happened. We've not seen the cycles. So we will have to see how these algorithms hold out over a downturn as we see in the future. And the second part, I think, is a lot to do with capital. I still feel that these fintech companies don't have enough capital. So that challenge will be out there because it's a very cash or a capital intensive business, which is lending. So if you really want to lend in the market, the debt is not available to the fintech companies. So that's a big challenge because nobody wants to lend to them. And hence you have to borrow equity and then start lending. Now that has its own limitations, etc. So to really gain size, you would find that the lending NBFCs stroke fintechs are going to struggle, and only the ones which can get significant size of equity or partnership with larger NBFC stroke banks may survive. So there is going to be a bit of a challenge on the lending side in the way I see it, which is that they will be constrained on capital, plus they are not tested on a downturn. So maybe 2 years down the line, when they're at least seen one cycle, we can clearly see that this challenge, how their algorithms could actually tide over the hump. So the use cases are many. So you know the overall thing which is happening on the payment landscape, where everybody on the wallet side is actually taking the APIs for UPI, and the UPI is getting embedded into the payment app like the phone pay, and even the likes of MobiKwik, etc., are now moving into that area, wherein wallet and UPI is going to coexist. So my sense clearly it is that the fintech companies will survive and do exceedingly well in payment space because their understanding of customer experience or the UX of the app is always much, much better than the banks, and hence they will continue to drive the UX and the user experience, and the tools and the railroads will be driven by the way government is driving the railroads. So these use cases will that I spoke about, be it MobiKwik or maybe PhonePe or maybe Juno and etc., are all the use cases wherein they started off as independent use case, but over a period of time have now embedded themselves with the UPI railroad, and very soon will embed themselves with the Aadhaar Pay railroad, which is the Aadhaar enabled payment system railroad. And you will find that this coexistence will happen, and will happen with people like us, and will happen with all the other progressive banks. On the lending side, there are multiple use cases. So we deal with people like Capital Float, Indify, Ziploan, India Lends, Phenomena, etc. All these guys are plugged into the platform of IDFC as a bank in the platform. So these guys are basically co-creating algorithms with us, and you able to leverage the balance sheet and the strength of the balance sheet of banks to lend or co-lend to the borrowers. And these algorithms are being tested, and the algorithms are being tested together on various use cases. So what we see clearly is this trend is going to be much, much bigger, because it's a win-win for both the customer, the fintech company who's basically building the algorithms and sourcing, and for the banks, because this is giving them an exposure to an area which otherwise would have been very expensive for them to really get exposed to. And hence, we're very excited about this part of the fintech boom which we're seeing in India. So in a nutshell, I think on the payment space, you will find fintechs integrating with banks, and aggregation happening on a common railroad being driven by the government regulations, which is predominantly Aadhaar-enabled payment systems and UPI. And on lending, you will find that the coexistence or complementing happening for the first cycle of downturn to be tested by fintech for them to really take the next level of growth. Back to you, Char.
Thank you so much for that, Bhavesh. I would like to move on. If there are any more thoughts, either if you have any thoughts from Anil or Neha or Vishal on this topic, on like the rise of fintech in the Indian context. Okay, so I think what we'll do is we'll then move on to the next discussion topic, which is on like global fintech and like the ability to go leverage their experiences in the Indian context. So I would like to quickly, go share some thoughts on this. Like the global fintech market has grown over 12 times from about 930 million in 2008 to over $12 billion financial technology landscape in the year 2014. a report published in February 2016 by Ernst & Young compared 7 leading fintech hubs, and it ranked California first for capital and talent, and the UK first for the government policy, and New York City first for demand. On that note, I would like to invite Vishal to start this discussion and also share his experiences while setting up Indonesia's first fintech bank, that is Tenuku. Maybe the opportunities that he had at that point of time, and like the challenges, and of course, how can we leverage these challenges in the Indian context? Over to you, Vishal.
Thanks, John. Sure, you mentioned while right now somewhere Tallinn as a fintech hub. Go London and then Tallinn, is it?
No, I said this thing, right? UK was the first for this thing, right? Government policy, and then New York was the first for demand. And this thing, right? California was rated first for talent and capital. This is as per the report in Feb 2016 by EY.
Okay. Yeah. All right. Okay. So, I'll start off by this. That fintech in itself has become a little bit of a catch-all phrase. How I see it is that fintech started in the Western world. I used to live in Europe for 10 years, and over there I saw the fintech is more about efficiency. So if you see, financial products and services are selling. What has changed from fintech is the delivery and the design of it. Mainly to make it user-friendly and to make it much more, let's say, cost-efficient. So when Lending Club, for example, started in US, and you had TransferWise starting in London, they all started to save on the cost which the banks were charging, which seemed exorbitant over there. While in this part of the world, Indonesia, India, likes of Philippines, Malaysia, and all, their needs are different. And over here, the first of all thing which I have discussed with the regulators over here also, and which they agree, is that instead of copy-pasting the model which was there in the Western world, we should try to look at that, can fintech address the market which was not addressable before? So if the technology cannot do that, then it is just a digital, let's say digital upgrade. So when I started in Indonesia, I saw that over here, the population is around 250 million, out of which 40 million people are in the top of the pyramid, which can be termed as segment A, which are serviced by the banks over here. There are 100 plus banks, 122 banks here, and all the 122 banks were serving segment A. Nobody for segment B and C. And similarly, when you look at India, it's not that bad in India. There are banks which are serving the bottom of the pyramid, but over here, none. So that's where we saw the opportunity. At the same time, that technology can play a role in having some social impact. So that was the start of the idea. Now, when I looked at the various fintech models at that time, there were some P2P lending models, digital lending models, and all. Since it came from the Western part of the world, you can understand that the digitization of the data, means the digital data available on the web, is quite a lot. So if you look at UK, Germany, and all, they can connect to tax database, they can connect to credit card database, and many databases to evaluate and score the customers. But same in India and same in Indonesia, that not so much of digital data and the credit history is available over internet. So we cannot make use, or we cannot give the loan to the unbanked who don't have credit history. As in the banking world, we call them the customer with thin file. So what we did is that we started building an algorithm based on the web footprint. We created 4 baskets. The first of it is called device info. So as many of you from the IT background would know, that just by clicking the send button on the form, the kind of info which one can receive, the data scientist, is like very good for profiling. As an example, which phone you are using, what's the operating system, what's the browser, when did you upgrade your operating system last time, what's your cookie setting, and what's your security settings, and what is your ISP address and all, and that's enough to profile an applicant. Next basket is the browser behavior. The thing which has changed in the digital era over the last 10 years is that before 10 years, we used to collect the data and ask the customers from the surveys and all. So we used to believe in what the customer says. Now, because of the data, instead of just believing in what customer says, we can observe what the customer does and how the customer behaves. And that's an excellent source of information for credit scoring. For an example, on the browser, how many times the customer has used copy-paste, how many backspaces has been used, did the customer scroll up and down how many times, what's the typing speed, did they look at the terms and conditions or not. So for example, somebody does a copy-paste of their ID card. One would think that, okay, that's normal to do that. Nobody would remember the ID card number. Acceptable. But you can understand that if somebody is doing, in our observation, is that copy-paste, it means they have opened few more windows. So they are doing loan shopping, for an example. Because otherwise, if they are just applying for the single loan, usually they would take out their ID card from the wallet. There is a particular time involved into that, and they'll start typing. So that's what comes out of the browser info. Then the third is the location info. So there are two location inputs. One, the point from where the application is made physically, and the second is the address which is given on the form. What we do is that we have plotted a certain diameter around that point, and we have the whole map which takes into account how many places of interest are there within that diameter, within that radius, which is how many churches are there, how many mosques are there, how many schools are there, and how many parks are there. There is a positive correlation between the payment behavior and the number of places of interest. Then location info is also used for micro marketing and targeting the customer, because usually there is a clustering effect where the good payers would congregate and the bad payers would congregate around a certain zip code. Then the fourth basket, which we look at, is the web footprint. What it primarily means is that now most of us would have done the let's say Google search of our own name, but you may not have done the search of your email ID. So our algorithm would immediately do the search of your name on all the search engines, Google search, Bing, Yahoo, and everything, and also of your email ID. So to give an example, if somebody's email ID, so your Facebook data is private, your LinkedIn data is private. However, these social medias would disclose which email ID you have used to register at them. If one particular email ID has been used, for example, more than 20 social media sites, then it's a negative credit score. So that email ID, is it a company email ID or is it a personal email ID? If it's a company email ID, does it matches with the domain of the company and the ISP of the company? So those kind of checks are done on the web footprint. Then we have the fifth basket, which is primarily a derivative of all, which is fraud detector. So there are around 35 plus fraud detecting tools. To give you one of the examples, is that if somebody has done a copy paste of their mother's name or their own name, what it means is that they are creating false identity. So if they have created some identity and they are putting their name as a copy paste, and also the typing speed. Usually the people who create the false identity are much faster. So they would be able to complete the form much faster. So if it is below a particular threshold limit, then it comes as a red flag. So that's primarily in terms of the scoring. So what this helped us is that we were able to serve to the customers who were never banked before. Now we face one challenge, which I think you would be facing in India also. That how would you transfer the money? They are not banked. So they need to have a bank account to transfer the money, or else cash is an issue. So we're tying up with the mobile wallet companies. Now, in that process, another opportunity came up, and which is also, again, I think, believe in applicable to India, is that we have developed now the scoring model based on the phone behavior. So now There are many customers of this segment who never used the web before. So they are using the feature phones, and so the scoring algorithm now takes into account for these guys that from where, how many contacts they have, how many SMSs they have sent, and how long do they talk over phone, how long do they talk when they're talking from one carrier to, or from same carrier to same carrier, and from same carrier to another carrier. How many times they have changed the SIM card, how many times the SIM has changed the telephone tower. So all these, based on these information, we can assess even they don't have the web footprint. So that serves to the market who do not have any bank account. So we can transfer the money on the mobile wallet, and they can transfer it back through their mobile wallet. So that's primarily about the Tunaiku, which has become a pioneer in this in Indonesia, which is now serving to segment B and segment C. So we are now termed as a fintech bank with a social impact and approach towards financial inclusion. Let me just check, Joy, you have given some things which you wanted me to talk about. Yes, you want me to talk about some trends of fintech in globally.
Correct, that's right. If you could just maybe give us a viewpoint of, where are we stated right now, and, what's the next steps in this sense.
Right. So there are, I see three big trends which are happening. One of them Bhavesh touched upon. Number one is blockchain. You all would have heard about it, but it is just a scratching of the surface what has happened until now. So new technologies, number one, blockchain, artificial intelligence, like robo-advisory and all, and Internet of Things. These are the three new technologies which I think are playing a big role in shaping up the industry. Second trend which I see is happening, which Bhavesh touched upon, is the tie-ups between fintech and banks. One of the mistakes which I believe fintech players are making in most part of the world is that they are of the view that banking will change completely going forward. It will not look same, and regulators will not be in the scene. That I really doubt would be the case. Regulators are going to regulate this industry and are going to play even more role in the industry than before. Because of which, it is much better idea to tie up with a bank, because banks do bring the experience with the regulators, and fintech companies bring in the benefit of the agility and the new technological solutions. So these are the second ones, and the third one, which I think is the new products, like which yet fintech companies have made. I don't know if in India you already have some mortgage lending fintech companies and the insurance fintech companies or not, but these two sectors are yet to get the kind of let's say importance which they deserve. There's a huge market over there. But there are some companies which have just started, like I know in UK there is a company called Mandway, which has just started in mortgage lending. So these are the trends which I see globally which are happening. I also see the things which are happening in eastern part of the world in the trend wise. A lot of focus fintech players are playing, or the importance they are putting in is gamification for financial literacy, which is quite a good thing which is happening. In fact, it started in the Western world, but now the Eastern world is adopting it quite well. And this, if any of the fintech players are on the attendees, then you may want to highlight that when you approach to the regulators, because this is something subject very close to most of the regulators' financial literacy. And there is a positive correlation between the financial literacy and the amount of financial product of state of any institution. Is there any particular thing you have just mentioned about some of the global companies here with the global success stories?
Yeah, that's right. I mean, if you could just maybe just go, if you could just go take us through maybe a few of the big names. Of course, there's the PayPal's of the world, and these are the big ones that we've heard of. but maybe like other people in the space who are of course creating some impact.
Right. So one of the companies which you would have heard now in case of foreign exchange transfer, there's a company called TransferWise, which is doing very well. Then in case of a new bank which has come out, a digital bank doing very well, is called Number 26. That's based out of Switzerland, Germany, and you can open a bank account. They have developed the technology of KYC over phone. So they will take your video camera, webcam data, and they can be able to identify you through your ID card or whatnot. These are doing well. Then let me just check notes on this. There is a company called Creditech, you would have heard, in Germany, which is doing good in terms of the algorithm and all. I believe that they are also using the e-commerce data for developing the algorithms, include the credit scoring algorithm and also predicting the purchasing behavior. So those are the few names which I can tell. Then yes, then there are Wealthfront in case of advisory. They are doing so robo advisory. Robo advisory is another thing which will do quite well. Wealthfront is one of the top names which comes for robo advisory.
All right, great, Vishal. Thank you for that extremely engaging session. I would also, in case like either Bhavesh, Anil, or Neha have any thoughts on this point on like the global fintech landscape and would like to contribute some of their thoughts, we'll be happy to take them on. Okay, I think let's move ahead to our third discussion topic now. For this, I would like Neha to lead this discussion topic. This is on like the power of the fintech landscape, and does it have the power to disrupt like the traditional financial services as we know it today. Just to give you some numbers, about 60% of all banks in the world see fintech as a collaboration-worthy entity. Apart from increasing like the customer centricity, fintech also has the potential to address a large market and and at the same time even reduce operation costs. Neha has worked with financial institutions and banks as they leverage technology for differentiation in the market and becoming more customer centric. We would like to invite her to take this discussion forward along with the other panelists as well.
Thanks, Joy. So if you look at the topic being how fintech has disrupted financial services, I think there's some extra. Can you hear me?
Yes, we can hear you now.
Okay.
Bhavesh, I believe you are on the phone as well. You are online now.
I'm there.
Right. So if you look at how the fintech companies have evolved, right, the last 2 to 3 years, we started by saying fintech companies kind of came to the market as what's called as disruptors, in which case they were looking at providing alternate financial services, established banks and insurance companies. So starting from if you're looking at the lending club in US or to looking at Joy, there's a lot of echo. Can you hear me clearly or the echo is?
I'm able to hear the echo as well. I'm just trying to wonder what is causing it though. Is there anything else around your computer that is, maybe causing feedback? Is there some other computer which is on with the same webinar?
No, there isn't.
I think it keeps coming and going, Joy. Occasionally there's a lot of static that suddenly one can hear. But I guess let's go on and see how best we can, manage this situation.
Okay.
Sure, if you could go ahead, Neha, let's just give it a shot.
All right, 1 second.
so as I was saying that Joy, I don't think this is work.
Hello?
Could you try once again, Neha?
Yeah, I'll try. But I can hear the echo. Alright.
So
So I
as I
was
said
saying
that
that
right
right
from
from
US,
US,
which was a lot of lending
lending
companies,
companies,
which came to the scene,
whether it's lending clubs or lending services, or to the fact that they were challenged the banks that were being set up in UK. So we have the likes Atom or Fedor coming to the. I think initially the whole intent of fintech companies was to provide alternate, if I may say, uh, financial service to the customers at large. What we found out in the last 1 year,
the
fintech
fintech
companies
companies themselves
themselves
realized
realized
that
that
it's
it's
not
not
as
as
easy
easy
to
to
go
go
and
and
build
build
a
a
brand
brand
and
and
actually
actually
look
look
at
at
acquiring
acquiring
these
these.
customers. So we
Saw
saw them
them
moving
moving
from
to
what
what
we
we
call
call
as
as
disruptors,
disruptors to enablers,
which
which
means
means
that
that
rather
rather
than
than
competing
with the fintech, with the
established
established
institutions,
institutions,
we
they
actually
actually
went
went
through
to
the
collaboration,
collaboration, and
and
I
I
think
think
played
played
an
an
important
important
role,
role
which was actually
actually
to
to
address
address
the
the
innovation
innovation
agenda
agenda
of
of.
these institutions.
So I think while we wait for Neha to get back on, let's just look at like the fourth topic that we have today, which is let me just change the slide as I speak to you all on the startup ecosystem within the fintech landscape. So again, we have brands such as Paytm or MobiKwik. Of course, in the Indian context, you also have like the bank bazaars and the citrus space of the world, which have obviously become very common household names by now. As well as the standard UK banking giant Barclays is also expected to enter the fintech space in a big way, along with other accelerators and incubators. Tapping the startup ecosystem here in India. I think we should spend a few minutes with our panelists on like the sustainability of these startups in the fintech landscape. Is it a buzz or is it reality to stay with us? Anil has spent 26 years across organizations like Citi and RBS, and thereafter he has dived into the startup world by co-founding OneCrowd. So I think let's hear from him in this space, and of course, like the others can also contribute to this discussion topic. So over to you, Anil.
Thank you, thank you, Joy. So yeah, like Joy mentioned, I'm part of OneCrowd. We're a startup ecosystem, and given, in some sense, a vantage point that we occupy, we do get to see a very large number of startups from the fintech space as well. And therefore, to answer the question that Joy has posed, to some extent, I think there is a lot happening right across the industry, each of which is in its own way contributing to the growth of this powerhouse called fintech. And by fintech, we don't necessarily need to mean and refer only to startups that are operating in the financial services market, but indeed right across the industry where technology is being employed on a scale hitherto not seen, and therefore, it is bringing in and ushering in a revolution of sorts. While the names that you mentioned, Joy, Paytm, etc., have obviously caught the attention of the world, in reality, I think there is a lot of change occurring right across the system. My own gut feel is that when GST rolls out and rolls out in its entirety, it will be the single largest contributor to bringing in change to the system, because there'll be a very large number of players in the market that are going to benefit from that, especially those that don't have access to credit, but can now get access to it thanks to the fact that a lot of the transactions that are outside the books are brought on to the books, because of the very many benefits of GST. So we look at the fintech opportunity within the startup world as one where they're going to continue to drive a lot of change. We've seen that in the payment space, so I think that is somewhat fatigued now. But we are equally seeing that in the credit creation space. We ourselves are invested in a company that's doing some in that space. So we have somewhat of a ringside view of what's happening in the market. I also think that as for whatever it is worth, demonetization has, in some sense, helped bring some focus to digitization, and it may not have been the best way of doing that, but since it's happened, I suspect that the digitization trend will continue, and there'll be a large number of, again, players offering a number of services and products around that. For example, IDFC Bank is a great example of a bank that has embraced technology to a significant degree, such that they can boast of being a very large bank in India, but with a very small physical asset base. So I think that's the kind of change. That's the kind of change that technology, fintech, as it were, is going to bring to the system. And we are very sanguine about the kind of prospects that it means for both the smaller, newer startups as also the more established players.
Okay, great, Anil. Thank you for those thoughts. I think obviously, coming from you, these are extremely insightful. I believe we have Vishal and Neha with us as well, and of course, Bhavesh is on the phone line. In case any of you guys have any thoughts on like the fintech, like this thing, right, startup landscape in India, or in fact even globally.
I can talk. This is Bhavesh here. I can talk about the my experience working with fintech companies in India in particular. I think as I said in my opening remarks again, the space is booming. A lot of ex-bankers on the lending side are coming in and opening up NBFCs. It just takes 6 months to get an NBFC license and build up a platform. So the space, let's say 12 months back, if you were to read a report and find how many fintechs are getting into the lending space, be it on the individual side or on the entity side, you could count them on your fingertips. Today, I know that there are about 45 to 50 which are running the business on the SME, MSME side, and a similar number on the individual credit side. And every month, I get at least 5 to 7 more people who just started off in this space. So I think this space is really, really mushrooming big time. A couple of them have really gone large and got in excess of $50 to $100 million of equity, and I'm sure they'll attract a lot more. The next stage that we find on the landscape side is going to be on Aadhaar-enabled payment system, on AEPS, and I think you would find that the entire wallet story on fintech space, which was the darling of fintech per se, which was the mobile wallets, that's going to move away into the Aadhaar-enabled payment system, and you will find people like, so there's a startup called FinPay, which has just come on the scene, and these are the folks who are using the Aadhaar biometric and the railroad of AEPS of the government to build use cases around the payment ecosystem, which don't use cards or wallets, but use the Aadhaar-enabled payment system. And you will find that that's going to be a big push, because coming in from the government itself, you'll find that area really, really moving. I think the third space that I'm finding a very limited color so far, but you will see a lot more action happening, is action analytics. So a lot of fintech analytic companies are coming into play, which means that they are giving you access to early warning systems by collecting data which is out there. Could be companies like Pro42, Save Risk, etc., etc. These are the guys who are now connecting their platforms on doing customer lending analytics, which is giving you live triggers, etc., and also doing a lot of analytics on customer profiling and giving you customers to really attack on, and going and saying, hey, you want to underwrite these guys, or you want to open their bank accounts, or you want to do banking with them. These are the people available in the market space. So the landscape is actually mushrooming with a lot of people. I'm only a bit skeptical on the survival of these guys, broadly because of three reasons, as I mentioned. One is capital. I think a couple of the lending side, capital-intensive fintechs may not get capital, and hence may not really grow, and hence could be acquired or die. That's one risk that I see clearly. The other is the regulatory challenges which the payment fintechs are going to go through. So there's always going to be a fight between the Indian Banking Association and the Mobile Wallet Association stroke the entire ecosystem, which is alternate fintech payment ecosystem. So the survival of these guys is very contingent on banks today, because they give you the bin and they give you the railroads, and if they cut the pipe, as SBI did it with Paytm, or ICICI did it with PhonePe, then obviously these guys will have a struggle. But I personally believe that after some bit of turbulence for the next maybe couple of years, maybe 18 to 24 months, you will find banks like us who are embracing fintechs big time. There will be a lot too many banks out there in the market who start embracing fintechs, and you will find co-creating platforms available between fintechs and banks. That's the way I see it in the market.
Thank you a lot for those thoughts, Bhavesh. The other thing I would like to quickly inform everybody is that we are also taking some questions, which will be answered by these panelists. And however, we have allocated about 15 minutes from 5:15 onwards for the Q&A round. But we would start welcoming your questions from now onwards. I've already received about 4 questions from Prudvi, from Turbashu, as well as from Harita. So as we move ahead, I'll just keep on referring back to these questions. But I believe we have Neha back with us. Are you there, Neha?
Yeah, can you hear me?
Yes, perfectly. I think this is much better. So I think let me do one thing. Let me just go back one slide, and let's again try to focus on this extremely important discussion topic on does fintech have the potential to disrupt the traditional financial services that we know of. So if you could share your thoughts, Neha. I know that you already got started, so maybe if you could just go pick up from where you left off.
Yeah, thanks, Joy. So as I was saying that if you look at the evolution of fintech companies, they started off with the clear intention of disrupting the financial services and essentially providing an alternate platform to consumers, be it lending, be it from a payment solution, or even from a banking perspective. What happened and what we've seen in the last 1 year is there is clear realization of, between the fintech companies to say that it's not easy to go and get the the customers and the numbers which would allow them to scale up. Also, the fact that there is still, when we speak about financial services, a lot of trust that is imposed by the consumers in the banks and financial service providers, and to that extent, any fintech company needs to build that kind of brand equity. So gradually, the shift is being made from what we call as disruptors to enablers, which means there's a great amount of collaboration that is taking place between the established providers, the financial services providers, and the fintech companies. To my mind, a lot of it is also kind of enabled by the regulations. And let me kind of give you an example. So if you look at UK had a clear intent of what they call as creating alternate digital banks. So the regulator himself or itself, if you look at the FCA, did allow the likes of, whether you look at Tandem, Atom, or some of those banks to come up, because they wanted the market to get more deeper. They wanted to provide an alternate solution. The regulator played a role in creating these challenger banks. And we saw a similar behavior in US when it comes to creating alternate lending platforms. So two different approaches being taken by the developed markets, which allowed these financial services providers to act as potential disruptors. The same goes for China, where you saw that the regulation was probably not that, if I may say, tough in terms of creating alternate or fintech companies, and that spanned across payments, whether it's Alipay or Tencent, or looking at alternate insurance companies. So, to my mind, the regulator plays a big role, and which definitely you don't see it in India. There is a recent committee, on not so recent, 6 months back, a committee that was formed for deciding what should be, allowed as far as fintech companies go from a service provision perspective, and hopefully that report should come soon. But definitely, I think the mood and the intent is going to be a partnership-led model. And in that space alone, I think Bhavesh has spoken about it. We saw other examples also that we see a lot of our clients, and we playing a role also in that, is where they have identified certain areas where they want to partner with fintech companies, and this could vary across alternate credit risk scoring models, or to looking at, what's the kind of biometric solutions that can be provided. Two things like, can we go and provide, a more personalized kind of services to our customers, and this could be across mobile apps, this could be across, on their net banking and so on. So I think the needle has moved in a big way. Also, if you look at globally, we've seen in some ways an acquisition of what were traditional banks looking at acquiring the established fintech companies. So you saw Simple being acquired by BBVA, and now though it kind of operates as a separate vertical, but it in some ways demonstrates that the established banks are also realizing the potential of fintech, and to that looking at either investing in those companies or in some ways looking at acquiring those companies. And to my mind, the collaboration, it makes immense sense because for 2 or 3 reasons. If historically you've looked at financial services and you've looked at the adoption of technology by them, we have come across very long kind of implementation cycles. The standard method of software kind of implementation, the SPLC method that we talk about, and which led to very poor kind of response times in terms of catching up with the market. Fintech roles play an immensely important role in allowing these institutions to be more agile, and which means that no longer for everything they have to go back to their IT department and wait for their, if I may say, need to be prioritized in the large number of projects that the IT company, the IT department might be taking up. So it allows them to be more agile. It definitely allows them to be more cost effective because a lot of fintech solutions out there, A, are being offered on cloud, B, are being provided on a transaction model, which means that I'm not always linking into a user license, so pay as you use kind of a model. And definitely we're looking at a model which allows me to look at some kind of risk sharing as well, because more and more fintech companies are looking at a risk sharing model with whoever they're working on the other side. So I think all in all, it can be definitely a win-win model on both sides when they're looking at collaborating. From a reach perspective, I feel when we talk about reach, there are two kinds of examples I can give. One is reach definitely from an end consumer perspective. We heard about how, as far as financial inclusion is concerned, there is definitely a role that fintech companies are playing in terms of reaching the last mile. Or even in case, looking at SECD or SECC customers, we're looking at definitely widening the base. I can give you an example. We were actually working with an NBFC for their SME lending business, and they were looking at how do I extend the reach beyond, my sales team, and can you help us in finding those fintech solutions which we can potentially white label, and we can look at reaching SME customer base who traditionally we might not have even looked at providing a loan because we don't have enough information on there. It's a very thin file kind of an environment. So are there any alternate ways of actually profiling these SME customers? So definitely it brings a greater depth in the market, very relevant for an Indian kind of a market context, and it provides a reach. I think the other kind of reach which we are increasingly seeing is the talent reach, because to my mind, for a lot of both business and IT teams within these organizations to continuously be on top of the curve in terms of what are the new things happening out there and how can we really be innovative, it becomes a very hard task, and especially in large banks, in which case the fintech companies by their own kind of team, I think they actually help in bridging that gap, to my mind, which is a talent gap, and actually can work in an extended arm of the bank or the financial institution to help in kind of embracing those solutions. So all in all, I see more of collaboration and enablement going forward rather than a disruption. The key point is to see what will be that model in which they collaborate, and this is both a commercial model that needs to be worked out, but more importantly the trust model that also needs to be worked out, because the startups being small kind of outfits with not a large team also need to have that confidence that whatever they work with the financial services or institution on the other end, they would also get an opportunity to scale up and reach to other banks and organizations. And from the bank's perspective, the risk is definitely that will this startup see the entire kind of, if I may say, life cycle? Will they be the next year? I mean, am I taking a risk? And so that's always going to be that dilemma or the challenge that will work on both ends. But having said that, in India, I think, and every day I meet, banks or NBFCs or insurance companies. I think on the highest scale, we've seen cases of each of them working with 50 to 60 fintech companies. On a lower scale, definitely anything between 10 to 15. So I think it's a very kind of robust market that has been developed in India, and that is leading to a great amount of opportunity for not only the Indian fintech companies, but a lot of global fintech companies as well. Yeah, that's about it from my end, Joy.
Thanks a lot, Neha, for that. Is there anybody else who would like to contribute to this topic on the ability of the fintech solutions to disrupt traditional financial services and banking?
Yeah, hi, this is Anil. I'd like to add to what both Neha and Bhavesh said. So, when you look at it, with some history at the back of your mind, fintech has, there've been waves of absorption of technology within the financial services industry in India. So, if we cast our minds back 25 years ago, there was no core banking. Core banking, as it were, came and has, really become the bedrock on which a lot of other innovation came to be. And then came the automation of the clearing houses. And of course, as Bhavesh said, that there's been a lot of action in the payment space, and that's now morphing into a level of sophistication hitherto unseen, making it a lot simpler and a lot more accessible. And so I think unless all of this ultimately plays into the more basic concept of financial inclusion, the ability of the banking system to appraise and analyze credit more efficiently, and to speeden up transaction flow. So, for example, can you think of going into a petrol station to fill petrol in your car and not having to touch either paper or plastic? now that would be amazing, because could you think of a system where it is paperless, it is cashless, it is contactless, the STP, the straight through processing, is not only at the financial services end, but physically at the end of the movement of sort of materials in this case, and that is when you would find a maximum amount of efficiency being derived out of this. Otherwise, what will happen is that it would get absorbed in pockets, and you'd have a lot of bottlenecks. So for fintech to really morph into something of a boon of sorts, not just to financial services but to the economy, you'll have to have a lot of technology, which has not yet happened, pervade the rest of the market as well. So it's just not enough, to say, this is a bank and they're absorbing a lot of technology, or this is a payment company and they are providing plenty of technology-led solutions. So today, if you want to assess the quality of credit of an individual or an SME or a micro company, it's not easy. And if technology can get down to the level of making that easy and that more efficient and that a lot more transparent, I think that is when you would see the maximum impact of it on the economy.
Right. Thank you for that, Anil. Now that we have you, I'm going to just quickly pose one question to you, which we've got from one of our attendees, Apurva Bhargava. Apurva, I'm going to try to unmute your microphone if you could ask the question directly into your system. I've done that right now, Apurva.
Yeah, hi Joy. So Joy, my question is to Mr. Anil. So my question to him is, how can banks like IDFC increase their base in India without much physical assets, given that when it comes to depositing or withdrawing or even buying any policy from the bank, people still have a lot of trust on the human interaction?
Thanks for that question, Apurva. Anil, would you like to take that on?
Yeah, sure. I know you've alluded to IDFC Bank, and I think the best person to answer that is Bhavesh. I don't see him on the call anymore. Maybe he's off. I can't offer an answer to you,
Bhavesh is on the phone
on behalf of IDFC Bank.
Probably.
I'm on the phone.
Oh, great,
Yeah,
great,
Bhavesh,
great.
I would point this question to you.
Great. Yeah. What I can do is I can offer. Sure, go ahead, Bhavesh.
So you want to speak, Anil? You can go ahead. I can.
Yeah, no, I can offer a more generic answer. As to how it will become easy for a customer or a person dealing with a bank, and I think that will happen, pretty much when the bank moves onto your mobile phone or a handheld device, quite like your account move with you with a debit and a credit card. So I really think that there are some very simple ideas which can make a huge difference. So the power of a simple idea can't be underestimated. And my belief is that if you could try and both reduce and do away with paper, digitize the entire process, make sure that you can interface and deal with a bank pretty much from wherever you are on your mobile. I think simple things like that is what will drive customers embracing technology, right? Checks are still used today in India. So if you can allow for digital clearing of checks, by simple image processing, where I can take the image of a check on my mobile phone camera, have it routed to my bank and have it cleared, that sort of the ease with which you can put through everyday transactions, I think is what will really drive change. I hope that answers your question. Yeah.
So Anil, Bhavesh here, let me just put in two things to give a practical color to this question and to this answer. So we have the belief, and I'll give you statistics because I used to run branch banking earlier with ICICI, and I did it for many years. So I understand the need of the branch, etc. But what is important to understand is the traffic at physical branch structure. So you find that 82% of physical branch traffic is cash deposit and cash withdrawal, right? And obviously post demonetization, that's dropped significantly, and people have moved to ATMs. So when we were putting the bank up, and it's been up for 18 months, and we hardly have any branches. In fact, we just have 12 in the urban centers and 50 in the rural centers. But we're doing business over 4,000 points of presence. So there are two things which are going to make a bank in this age and era use technology and move forward. One piece is, as Anil mentioned, you need to have a very strong mobile application. And I'll just extend that answer that, like in our case, we have a very strong mobile application, which we can do anything and everything on the mobile app. Plus, it also comes embedded with a doorstep banking application, when the customer can ask for any banking services through the mobile app, sitting at their home or office. So cash deposit, check deposit, print documents, anything that you want, person comes in and he picks it up and he gives you a receipt and moves off. So you don't need to come to the bank branch to do that. And that's working beautifully for us and is very cost effective. That's number one that we've done, and we've been successful in urban areas. The second is that you need not have a physical branch. No customer wants to go to the bank first, right? If you really need to do a physical touchpoint banking, you don't need a bank branch, but you need a point of presence. And so in our case, we got 4,500 points of presence, which is basically the banking correspondent points, which have a tablet called the micro ATM. And that micro ATM is a full sufficient device hooked up to the bank server, which is lying in a kirana store in a rural village, or is lying in an urban kirana store or a retail store, wherein you as a customer can actually go and using your Aadhaar biometric and Aadhaar number or your debit card, you can do any kind of banking transaction, which is cash deposit, cash withdrawal, check deposit, etc. So our view is that the evolved customer, or which we call as a non-assisted digital customer, will move to a very strong browser, stroke mobile app of application for bank if the UX is very nice. And this has been our investment to build a reasonably very agile UX and a very intuitive UX. So there is absolutely no friction and there is no paper. So in our case, there is no paper for you to get going on to start your banking. There is no paper, pen, etc. So that removes the inertia for customers going on your browser or mobile app. And the second, if there is an assisted digital customer, that assisted digital customer can do a lot of things through the phone banking, through a banker on call facility, and through doorstep banking, wherein the guy comes with a micro ATM, a tablet device at your doorstep for you to do things. And third is a rural customer who walks to the nearest kirana store and is able to do the banking through a tablet which is lying at the kirana store. And this is the model that we're operating for the last 18 months, and I can tell you we've not had any problem in doing business. In fact, our productivity of our people are much higher than what I used to have in a previous employer. So this is working so far, and it is only going to get amplified further with the entire Aadhaar-enabled railroad which government is pushing, and that's going to bring in a significant amount of change in the way you and me do banking in India, and that's actually the survey and watch, and you will see a big action at least from our end come this Tuesday, right? So there is something big that is going to come out on the Aadhaar-enabled payment bridge, which is really going to change the way payment happens in India.
Right. Thank you so much for that input, Bhavesh. I have another few questions which we've got from Vaibhav. We've got one question coming in from Satyam, from Deepak as well. I'll take the one from Deepak, where I think he's pointed this, for Vishal. The question is, what do you think is going to be the next big thing in fintech other than banking, insurance, and e-wallets? Would you like to take that on, Vishal?
Yes. Uh, so other than banking, insurance, and e-wallet, no. So the one which I think the way will be blockchain, which is still not utilized, and artificial intelligence. So what I mean to say by that is that you see, blockchain is primarily where the trust comes into it, and all the banking is based on the trust, and there is a central ledger system. But blockchain has the potential to replace that. What it means is that the way we banks right now are interacting with each other and all, there is a big chance that that could be completely replaced by a startup, and we don't need the central ledger system. It may not happen in the near future, but it has the potential. And at the same time, blockchain would change the way we secure ourselves. So that's one thing which I see could play a huge role. In fact, it is the more we think about it, more we discuss internally about it, we see the potential is even bigger than the internet itself.
Right.
Yeah.
Thank you for that. Thank you for that, Vishal. I know we are running out of time though, but I think let's extend this for maybe another. We'll take another couple of questions. I think there were some technical snags, and that's resulted in a little delay. I'll take one question on from Prudhvi Dalta. I think if I could go point this to Neha. The question is on like the key trends and challenges in like the personal finance management space, and what role does fintech play there in terms of like personal finance?
Yeah, sure. Can you hear me?
Yes, I can hear you, Neha. Go on.
Okay. So yeah, in the PFM space, personal finance, I think we've already spoken about it. Definitely, I've seen many of our clients actually go ahead and look at robo advisory and basically looking at PFM solutions, which are looking at you know which would be AI led, or which would be basically led by profiles that have been built of the customers beyond their financial kind of information. So the idea is to provide advisory decisions and recommendations, which looks at the overall profile of the customers. And that's where we see a lot of fintech companies looking at the social profiling and looking at alternate wealth management attributes that can be used for making, giving advisory decisions. So yes, in the robo advisory space, definitely. The other thing that we also see is, and not so much from an India perspective, but globally, is the social trading space, where we are looking at customers actually mirroring the, if I may say, the investment behaviors either of the peers, and which can be done over a kind of a common platform, or they could actually mirror the investment behaviors of a lot of established investment managers globally. So I mean, it could be Warren Buffett, it could be Mark Mobius, it could be anybody else. But their actually trading styles and their investment styles are then actually captured over a period of time, and then consumers have an opportunity to actually use those, if I may say, insights or inputs to actually help in making their investment decisions. So yes, that's what at least I've seen a lot of fintech companies globally in that space. India, it's not really, regulatory or otherwise, it's not really kind of taken off, or is not yet kind of, if I may say, introduced. We are also seeing from, if I may say, and today only we were having this discussion. We're also seeing fintech companies who are looking at providing, if I may say, alternate ways of assessing the risk profile of a consumer. So, by that I mean, what is the investment psyche? How is he going to be a risk averse, or is he going to be a risk prone customer? Is he more leaning towards equities? What should be investment basket? But using a series of questions and using as alternate variables to actually look at profiling this behavior of the customer in a way that the customer is also probably not aware or not sharing financial information, but sharing his personality and sharing his behavior, which will help. So there are AI-led kind of models around that as well, and we are seeing these being adopted by the, if I may say, the large kind of wealth management companies across the globe. So these are a few of the trends that I'm seeing in the space.
All right, great. Thank you so much for your time on this, Neha. So what I would like to do is we have a few other questions as well, but I think unfortunately we will not be able to take these in interest of time. What we will do is, we will reach out to all of you via an email separately, giving you some more clarity on the questions, which you've asked us. But I would like to also take this opportunity, meanwhile, to thank all four of our panelists. We have Vishal, we have Neha, we have Anil, as well as we had Bhavesh on the phone line. I would like to thank you all for your time today, and we look forward to hearing from you, and we'll again get in touch with all of you very soon.